All right, what's going on, everyone? Good morning and happy Wednesday. Let's do a quick sound check here in the Essentials room. Hey, what's up, Christian? What's up, Lorna? Christian, are we going to see you in Orlando? I bought myself an Orlando Magic hat yesterday. I'm ready. Hey, good morning, Earl. Good morning, Stick. Good morning, Renee. Oh, Christian, awesome. I'm looking forward to it. Good morning, Minion. Yeah, Andrew, let me see that foliage. I'm hoping on the road trip to Florida, we'll get some decent foliage. But all right, guys, we'll jump in here. So S&P futures, overnight we came down and we didn't quite smooch it, but for all intents and purposes, we came down last night and we tested that 200 SMA, which I would expect, at least initially, should be a big level of support. So kind of three questions from here. Do we roll over and take out the 200? Which, for what it's worth, I think eventually we could do that. Do we trade sideways? A little bit of chop? Or better yet, do we rally back towards, maybe back towards that falling 21 EMA, which I think would make for a great spot to get short. So a couple things I'm seeing here from the bulls. And keep in mind, guys, the bulls have got to really fight here. They've got to go against the grain of a not so good looking weekly chart. They got to go against the grain of a daily sell signal, a 4-hour sell signal, a 2-hour sell signal. They got to fight. So first thing I'm seeing here, we don't have an hourly buy signal just yet. But for now, it looks like they're trying to, if anything, at least stabilize the hourly. Momentum crosses back above zero. Now, for those of y'all with the indicator, they've got the positive cross. It's going to be really, really important here the next few days that they keep the positive cross. What we don't want to see is something like this. They try to push the price. They try to cross momentum. They do get a little bit of a cross, and then right back below the zero line. They've got to get that positive cross. They've got to get it above the zero line, and then they got to keep it above the zero line. So a little progress here as far as momentum. The structure is not great. We're under the 200. Never bullish. We're under the 50. Never bullish. But we are back above the hourly 21. So a little improvement in structure, a little improvement in momentum. And then as we go down to our lower time frames, like the 15-minute, right now the 15-minute is actually positioned to go higher, being that we've got the buy signal here. Momentum checks out. Structure checks out. 21 crosses back above the 50. It's not a weekly chart or a daily chart, but in the context of this market, if the bulls have got any chance of, some sort of sustainable push higher, it's going to come from your lower time frame buy signals. So they're stabilizing the hourly. They got the momentum cross. They got it back above the 21. 15-minute goes bullish. And the 5-minute chart also prints the buy signal. So for those of you with the indicator, I think a good rule of thumb today, we don't want to see them lose the 5-minute or the 15-minute buy signal. All right, think in terms of ammunition, and then think in terms of what they have to fight. For the bulls to get anything going, they've got to fight the daily, the 4-hour, and the 2-hour. Their only chance of going against the grain is keeping something like a 5-minute, a 15-minute, better yet, eventually a 30-minute buy signal. So if those labels go from green to gray, right, the bars go from green to blue, not a great sign here. If they can keep the 5-minute bullish, they can keep the 15-minute bullish, and then from there they graduate graduate meaning, all right, here comes the 30-minute. Now we get the first 30-minute buy signal in a few days here. The more they build upon the progress, the higher they can take it. The quicker they lose the progress, the quicker we roll over. So they've got a little bit of fight in them here this morning. And then I think one more big chart here is the dollar. All that strength here in the dollar, it's definitely been a driving force for the move lower in the market. So in the blue corner, you've got the S&P futures, 5-minute buy signal, 15-minute buy signal. All right, little signs of life from the bulls. And then the Dixie here is the opposite. The dollar has a 15-minute and a 5-minute sell signal. So a big part of the path higher for the S&Ps, even if it's for a few days, if all we're looking for is a nice shortable rally, a big part of that would be the dollar going lower. The S&Ps can be oversold. The QQQ can be oversold. Pretty much everything can be oversold. It's tough to get that short squeeze rally if the dollar just keeps on kicking. So a couple sell signals there. And yeah, best case scenario for the bulls, Dixie kind of works its way back down towards that 21 EMA. And that's the bulk of the focus here this morning, guys. Watch your S&P futures. If you have the big 3 indicator, if the bulls lose the 15-minute and 5-minute buy signals, we could easily roll right back over. If they can keep the 5-minute and the 15-minute buy signals, and then eventually we get a 30-minute, we get an hourly, they can keep it pumping. One more thing I do want to show y'all on the weekly chart. And if anything, I think this is just, for me, it's further reinforcement that we're looking to short the rallies. When and if we actually get a rally. So weekly chart here for the S&Ps. We're kind of at that point where the damage done on the lower time frames, it's taking a toll on the bigger time frames. Damage across a bigger time frame, it's a lot harder to quickly clean that up. So checking out the weekly here for SPX. The first thing we have, which is just kind of basics of swing trading, we're shaping up for our third weekly close under the weekly 21 EMA. Never a good thing for the bulls. The other issue here is for the first time since, we'll call it November of last year, now the weekly chart loses momentum. Got the positive cross. They kind of chipped away at rebuilding the structure. 21 crosses through the 50. They eventually get some stacked EMAs. Then you get the big squeeze, and off we go. Now we're at the point where the gas tank is empty. The gas tank that took us from 3,700 to 4,700. And the longer we hang out under that 21 EMA, the more the structure is going to break. So to me, just further evidence if we get a rally. Now the weekly chart kind of favors the bears. Bulls get 1 point, the bears get 2. If there's a swing trade there with a scoreboard like that, it's going to be shorting that bounce. And then the weekly here for the Qs is a little bit more interesting, being that we have a brand new weekly squeeze. Now, the thing with the weekly squeeze is we might be in a weekly squeeze, come Halloween. We might still be in that weekly squeeze come Thanksgiving. But eventually, the longer it develops, eventually the squeeze will fire. And I think, as most of us know, nothing can quite pack a punch like a big weekly squeeze. As long as the scoreboard favors the Bears, Bulls get 1 point, the Bears get 3. As that squeeze develops, momentum crosses, hanging out under that 21 EMA. So long as we're in a squeeze and the scoreboard favors the Bears, there's a better chance eventually the squeeze wants to break short. So keep that big boy in your back pocket. And then where the plot kind of thickens a bit, inside of that weekly squeeze, we got ourselves a 3-day squeeze. All right, a little squeeze on squeeze action. The scoreboard off the 3-day would also give the edge here to the Bears. So maybe it's late October, maybe it's November, December, January. Eventually, that big double squeeze will fire. First, the 3-day squeeze will fire. Then you're looking for the weekly. Things could change. Right? We'll keep watching them develop. But the scoreboard don't lie. So I thought that was kind of interesting. And then as discussed last week, a few of the big boys have got some big squeezes as well. One of them being Meta. Meta's got a crap load of squeezes. The weekly, the 3-day, the 2-day, the daily, the 4-hour, 2-hour, 1-hour, 15-minute. For the most part, things lean a bit more bullish here in Meta. The weekly squeeze, even though it's brand new, right now it's actually what we would consider an A+ setup. Right, perfect structure, perfect momentum, cranking out the buy signal. The 3-day squeeze nested inside of it, it does lean a bit more bullish. You're above the 200, above the 50, above the 21. What I don't love, there's no momentum to support that going higher. So I'm actually learning. This is one of the, from what I've seen, this is one of the more dangerous combinations. The combination being, you're in an uptrend. Everything's very strong. You put in the high, you pull back a little bit, you get a brand new daily squeeze. And for a lot of folks, the traditional thinking is the squeeze should fire in the direction of trend. Meaning a lot of traders will look for this current squeeze to fire to the upside in the direction of trend and take out the highs. You could have said the same thing about AI going back a few months ago. The move that led it into this daily squeeze was really bullish. All right, $20 to $50. Very, very bullish. Now think of some of the FOMO here. A lot of people missed the push from 20 to 25. They missed the move from 25 to 35. They missed the bus from 35 to 50. Finally pulls back. You get the consolidation. You get the daily squeeze. A lot of folks are going to look at the move that led it there with the assumption that squeeze fires long and we're going to take out the highs. At no point does our indicator say buy that squeeze. No green arrows up here. All right, no green arrow down there. Reason being you had no momentum. By the time the squeeze prints, and now AI is going through that compression phase, momentum already tapped out. It topped back here. It crossed negative back here. At no point does momentum support that squeeze going higher. So when I see a big 3-day squeeze like Meta, kind of my biggest gripe. Structure looks good. The trend looks good. My gas tank is empty. If we drill down to the 2-day squeeze, you're going to see the same thing. They push it, they squeeze it, no momentum. They try to break it out. Can't quite do it. They try to break it out. If we drill down to the daily squeeze, same problem. The 4 hour, the 2 hour, the 1 hour, they look pretty good. But that situation where you have an uptrend, you have a brand new squeeze, but momentum inside that squeeze is below the zero line. What I've noticed a lot more is it kind of leads to a trap. They'll pump it, they'll rope you into the calls, and then they dump it on you. Another good example would be the weekly chart here of gold. And if you watch that momentum histogram, you can kind of spot these coming from a mile away. Doesn't mean you short them, just means you avoid getting long. Gold is pushing, right, behaving like an uptrend, pulls back, rallies, pulls back, brand new squeeze. Where's the gas? You've got none. So they push it, they rope them in, and then the squeeze breaks short. So things to watch there. But for today, guys, I think keep it a bit more lower time frame based. Right. Take the context from your bigger time frames, and then as far as your trade decisions, as far as any kind of judgment call, I think a good market to get in the habit of watching a lower time frame. When I look at the signals here for the futures, the only ammunition the bulls have is that 15-minute. No 2-hour buy signal, no 1 hour, no 30, no 5-minute, just the 15. So I'm probably going to watch that 15-minute. And from here, if they lose the 15-minute buy signal, then how could I possibly think the market wants to go higher? If we don't have one time frame with a buy signal. But all right, guys and gals, any questions, any charts you want to take a look at, throw them on over, and we'll see what you got. Earl. Yeah, let's take a look. All right, weekly for nat gas. You can kind of see the divergence. They tried taking out the lows back here in April. By the time they're doing that, momentum's already on the up and up. It's not positive, it's not above the zero line, but it's on the rise. Now you've got the positive cross. We are stabilizing above the 21 EMA. Now, it's not a very bullish weekly chart. We're under the falling 50. We are under the weekly 200. But if anything, they've kind of got it stabilized. Momentum cross and back above the weekly 21. I think you want to see them keep that at a minimum, meaning keep it above the weekly 21. And then from there, the real trigger will have to come from your lower time frames. It's going to be a long time before, with my indicator, it's going to be a long time before this actually prints a weekly buy signal. But I can take that 21 EMA off the weekly as the launching pad. And then so long as we're above that launching pad, my daily's got a buy signal, my 4 hour, my 2 hour. Every time frame inside of the weekly currently prints a buy signal. So even though the weekly is not perfect, if they can keep it above that launching pad and they keep on cranking out all these buy signals, that can definitely give it some nice lift. I think the big level of resistance to watch here would be the weekly 50. Peter wants Apple daily. Apple's got a brand new daily squeeze, which could be pretty interesting here eventually. The thing about Apple is if you look at the inverse chart, minus AAPL, until things change, the inverse chart looks like something I would only want to get long. I've got positive momentum. I've got a brand new squeeze of the buy signal. And I've got a pretty good target here around that 200 SMA. Until all that changes, only thing I'd want to do here is get long. Meaning on the current Apple, even if it does bounce, so long as we're in a daily squeeze under the 21, it's something I'd have to look at as a bit more of a short. Changing, they cancel out those sell signals. Christian, the Iron Condor for Friday. My plan for now, Christian, if we're not blowing through the short strike, so if we're not blowing through 41.95, my plan would be just keep the exit orders working. If they can just kind of keep things sideways or better yet, pop it, we will get, we'll get filled here sometime in the next few days. On Monday's close, so Monday we close right here. I think the SPY Condor was at about, it was right around 30% of max profit. So if they can just keep things stable or pop it, we should be in really good shape here. What I'm more impressed with, though, is the size of the open loss. I think the max profit per contract on the max profit per contract on the SPY Condor was like $50. At the lows yesterday, I think the trade was down like $12, $13 per contract. So I like that ratio. Yeah, Earl, no problem. All right, NVIDIA and a few more here. NVIDIA. NVIDIA is a good example of that momentum thing I was talking about. On the daily chart, momentum peaked, guys, back in June. On the decline, now it kind of lives below the zero line. So they push it, failed breakout. They push it again, another failed breakout. Now NVIDIA can pop. All right, it popped. Notice how NVIDIA is going nowhere. You're trading in a huge box. If they don't fix momentum, if they don't get that positive cross, the way this will typically end eventually is they break this box to the downside. Rope in the bulls, then dump it. Now that problem here for NVIDIA carries up to the bigger time frames. The 2-day squeeze has no momentum. All right, so that failed breakout attempt back here. Momentum kind of told you it was a no-go. Never got that positive cross. If we go to the 3-day, we got a big 3-day squeeze. Momentum below the zero line. We've got a big weekly squeeze. Momentum is pretty much at the zero line. Now, they're not going to fix that all in one day. But if NVIDIA is going to have a sustainable trend higher, they have to fix that. First on the 30-minute, then the hourly, then the 2-hour, the 4-hour. For me, for now, the context comes from, all right, we got bigger squeezes. And for now, they're not really poised to fire to the upside. Doesn't mean I'll short it, just means I'll be a little careful here buying calls that expire in a month. All right, futures are chopping. Jesus has got MCHP. And then I'll see what the folks on YouTube have got. So this would be a nice short. Got the sell signals, got a couple of squeezes. Big 3 says perfect setup. I think the only thing to take into consideration here, and to be determined, was that the short-term low for the market? I don't know. We shall find out. But looking at the S&P futures here, was that all she wrote? They dumped it. We got within maybe $1 or $2 of that big old 200 SMA. Not bigger picture, but maybe for a week or a couple of weeks, is that all she wrote? When we're swing trading, we have to keep our focus here first. Indices first and then the stocks. Today, we can find a lot of things that look like the perfect short, and I'd throw microchip in that bucket. Good squeeze, everything lines up for a short. If that is the short-term bottom, and from here things get a dead cat bounce back to 4,400, there's just a really good chance that anything you're short probably going to go higher with the market. So my favorite time to short something like a microchip would have been ideally a few weeks ago. You've got a great squeeze setting up in microchip. At the same time, the S&Ps, they've got a squeeze right near that 21 EMA. Right. Everything gearing up for a huge flush lower. Now we're pretty much at the target. So just be mindful of that. I think we're always going to have our best and our most profitable swing trading when we're getting long or short that stock in alignment with the market. Meaning I'm not just shorting microchip because I think microchip is setting up for a big flush. I'm shorting microchip right now because I think it and the market are setting up for a big flush. Now I can short that stock, and ideally I've got a lot of wind at my back. If I short that stock and then the market rallies for a few days, I don't have the wind at my back. I got the wind coming right at me. All right, let me jump over here to the YouTubes. The tubes of the U. Yeah, so Leduc, you can definitely use the big 3 squeeze for day trading. What I would do is take, let's see, who do we got here? I would take time frames like the 1 hour, the 30-minute, the 15-minute, the 5-minute. And then all you're doing is looking for that big 3 squeeze across that time frame. So let me see, who's a good example here? And even for a day trade, it has to line up with the market. If I'm going to get short in a 15-minute squeeze for a day trade, ideally the internals are weak, the S&Ps are weak, the QQQ is weak. If today's a weekday, you could take something like this 15-minute squeeze here in Meta and look for a nice short. What I like to do early in the morning, I get up around like 4:30. Before I head to the gym, I'll look for a couple squeezes setting up in the futures. 15-minute, 30-minute, hourly. If I get a squeeze on a buy signal, I might sell a put credit spread. If I get a squeeze in a sell signal, I might sell a call credit spread. So I'm basically taking the swing trade that I would do on a bigger time frame, and I'm doing the same thing, same entry, same execution, just on a smaller and a faster time frame. All right, let's check out these futures here. Like I said, the only thing they got right now is a 15-minute buy signal. So it's all about path of least resistance. If only one time frame is telling us, hey, path of least resistance is to the upside, things can only be so strong, as opposed to 3, 4, 5 time frames telling us that. If the 15-minute goes neutral, then we don't have any time frame telling us path of least resistance is to the upside. So at that point, as a trader, you would ask yourself, why the hell would I get long here? The best part about these signals for me is they've kept me out of trouble. Like every day for the last 2 weeks, I'll be sitting here watching the market. I'll see how oversold things are. Like, man, we are oversold. We got to be setting up for a short squeeze. And I just never get the trigger from the signals. Keeps you out of trouble. Kevin, Boeing for a short. Well, I'm not a big aviation guy, so I can kind of get behind that one. Last I saw, though, Boeing seems a little bit cooked. Yeah, it's not the spot where I want to short it. For the same reasons in a bit more of a bullish kind of setting, I don't really want to buy it up here. I might catch a bit more, or I might take the entire pullback to the 21 EMA on the chin. I can short it here and maybe catch a little bit more. Or I catch a bounce back to $200 on the chin. So probabilities-wise, if we throw on the, let me get me Keltner channels here. So if we throw on the Keltner channels, and we have them measure a factor of 3, so 3 average true range moves above and below that 21 EMA. No average. Let's do this. You'll notice not too often do we even get down here to -3. Never mind get down to -3 and continue to trend lower. Doesn't mean it doesn't work, but it's all context. Being that far below the 21 EMA. Can I short it? Yeah, I can short it, but I can't short it aggressively. I can't come in here today down here and put 10, 12, 15% of my account into some Boeing puts. Where I can do that is all the way back up here. So food for thought there on the big Boeing. All right, S&P futures 4270. They're not punching the way they punch this morning, guys. Yeah, Fred, I still got that trade in a different account. I haven't looked at that in quite a while. Fly guy, love to hear it. And then Alexis, we'll see you in Orlando. Awesome. Yeah, I'm excited, man. We did the meetup in Austin last year. It was a really good time. So I am looking forward to it. Yeah, so shoots, good question. So the Iron Condor is based on the quant levels. So this will be the last thing I show you guys this morning. But if we go to the quant pivots, simple trading quant pivots, we go to weekly. So we did this trade last week and it worked out well. But all right, so we're we're taking, clean this up. All right, so the bottom green line, that's called weekly L2. The top red line, that's called weekly H2. You guys see right here, total closes inside H2 and L2 about 90%, meaning about 90% of the time come Friday, we're going to close somewhere above L2 and somewhere above L2 and somewhere below H2. So somewhere inside that that box right there. And that's the bet that we're placing with the condor. Got our short calls up here. We got our short puts down around 41.95. And that's what we're basing it on. So what you can do is on Friday, if you have the quant pivots on Friday, wait 15, 20 minutes before the close. And then from there, you can take the projected levels for the following week and then slap on the condors there. But all right, folks, I'll let you guys go here. Got the cash markets opening in 7 minutes. So as always, thank you for all your time. For those of you in the options room, I'll see y'all at 9:30 Central. And then for those of you in the mastery, I will see you at 10:30 Central. So have a good day, guys. Be safe, be disciplined, take your dog for a few walks, and I'll see you soon. Adios.